Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, what if I told you that a single date could mark the beginning of a structural shift in crypto? Not just a price move, not just another headline, but a moment where regulation, institutions, and market structure all collide at once. March 26th. It's not hype. It's not noise, it's convergence. And if even part of what's building beneath the surface is real, this could be one of the most important moments XRP investors have ever seen. Before we break this down, I just want to thank everyone that takes the time to like, subscribe, comment, and share. All these things really do help the channel and help this channel grow. And with that being said, everyone who's new here, there's a rant at the end of the video that everyone's come to love. Let's dissect this. Let's zoom out for a second. Because to understand what's happening with XRP, you have to understand how markets evolve. Why major financial shifts in history follows the same pattern. First, uncertainty, then quiet accumulation, then sudden recognition. We saw it with the internet in the 90s. Most people ignored it early on. Institutions were slow. Regulation was unclear. But behind the scenes, infrastructure was being built. And then suddenly, everything changed. Now here's the question. Are we watching that same pattern play out again with digital assets? But here's where it gets interesting. XRP has not been the loudest asset in the market recently. Bitcoin dominates headlines. Ethereum drives narratives. But XRP, it's been doing something different, quietly, strategically. It's been building structure. The silent signal, which is market structure. For months, XRP has been trading sideways. And to most investors, that looks extremely boring, like watching paint dry on the wall. But experienced market participants know something very important. Sideways markets are where positioning happens. We're seeing higher lows forming, stronger support holding, resistance tightening. This isn't randomness. This is compression. And compression leads to expansion. And this is what most investors are missing. Volume, not explosive volume, not retail-driven spikes, but steady, controlled accumulation. Let this sink in. This is massively important. It's not panic buying. That's not hype. That's strategy. That's what smart money looks like before a move. Let's talk about the institutional layer. Let's go deeper, because price is not only one layer. The real story, institutions. Large wallets have been moving subtle shifts, repositioning, transfers between exchanges. These are not random events. These are calculated moves, because institutions do not chase price. They prepare for liquidity events. I want to talk about electronic trading era. Back in the early 2000s, when electronic trading platforms started replacing traditional floors, most retail investors didn't notice. But institutions, they were already adapting. By the time the public realized what was happening, the system had already changed. Now ask yourself, what if XRP is sitting in a similar position? Not as a trade, but as infrastructure. The regulatory moment. Now let's talk about the piece that changes everything. Regulation. For years, XRP has been under scrutiny. Uncertainty has limited institutional exposure, capital inflows, market confidence. But here's the reality, ladies and gentlemen. Markets don't fear regulation. They fear uncertainty. Let that sink in. That's massively important. And clarity unlocks participation. But the real twist came when March 26 started appearing on the radar, not as hype, but as potential inflection point. A moment where legal clarity could evolve, institutional decisions could activate, market perception could shift. Not guaranteed, but watched closely. Here's the what-if scenario. Let's think bigger for a second. What if a fraction of global cross-border liquidity moves onto blockchain rails? What if XRP is part of that infrastructure? We're not talking about a trader anymore, ladies and gentlemen. We're talking about a system-level shift. Let's look at on-chain signals. Now, this part surprised many people. On-chain data shows large wallet activity increasingly, strategic transfers, positioning ahead of potential catalysts. These signals often appear before major moves, not during, before. Technical alignment. Let's talk about support levels. They're holding strong. Resistance tightening. RSI not overbought. Moving averages converging. Fibonacci levels aligning. This is what traders call a setup, not a guarantee, a setup. So the market psychology and now sentiment starting to shift. Communities are talking. Analysts are watching. Investors are preparing. Not loud hype, but growing awareness. And when awareness meets structure, that's when markets move. The convergence. So why does March 26 matter? Because it's not just one thing. It's everything happening at once. Technical setup, institutional positioning, regulatory developments, market psychology. This is what we call the intersection of preparation and opportunities. So here's 3 scenarios. The best case, regulatory clarity improves, leads to institutional deployment, leads to technical breakout triggers, leads to strong upward movement. The base case, partial clarity leads to controlled institutional activity, leads to gradual breakout, leads to steady growth. The worst case, delays or uncertainty leads to institutions pause, leads to short-term volatility, leads to pullbacks, but not necessarily structural damage. Here's the strategy talk. This is where discipline matters, because moments like this test investors' key principles. Understand your risk, watch your levels, avoid emotional decisions, stay informed. Because remember, short-term noise, long-term structure. Here's some historical parallels. The internet era. In the early internet days, people focused on stock prices, but the real winners understood infrastructure. They weren't just buying companies. They were investing in the future system. Now ask yourself again, is XRP just price action or part of a financial infrastructure shift? What are your thoughts? Comment below. And if you're still here, give me a like and subscribe. What are you waiting for? Post March 26, no matter what happens, the story doesn't end on March 26. Markets will react, consolidate, reprice information. And then the next phase begins. So here's the long-term view. If clarity improves, we could see more institutional adoption, increased utility, stronger ecosystem development. Not overnight, but structurally. Let this sink in. Here's a risk reminder. Let's be clear. Crypto's volatile. Moves can go both directions. No single day guarantees anything. That's why discipline matters more than excitement, as far as we're concerned, in our opinion. So my final thought, March 26 is not just a date. It's a moment where preparation meets opportunity, where structure meets attention, where potential meets reality. So let me ask you this. Do you think March 26 is just another day or the beginning of something bigger for XRP? Drop your thoughts in the comments. I read every one. I love answering. If you got value from this breakdown, hit the like button, subscribe to the channel, and join the Wolfpack, because we're not just watching the market, we're understanding it. Remember, price is reacting, the system is evolving, and the ones who see the structure early are the ones who stay ahead. Well, I hope everyone's having a good day, ladies and gentlemen. Sorry I couldn't be with you yesterday. Couldn't get off the phones with what's happening. But I want to ask everyone a question. If you've been paying attention to the previous videos, nothing that's happening in the markets should shock you in any way. We've been talking about and I've been blown away how tweets move the markets. You were ready for that. Again, we told you whipsaws were going to come. You were ready for that. So that's kind of like a bonus for everybody here that actually listens to everything that we say. I want to take the time to welcome all the new members of our Patreon, all the new members of the membership channel. Welcome. And just remember, one good tips from the pits can more than easily pay for your entire year subscription to the Crypto Republic Desk Monthly, and join over 400 plus active investors and traders who have chosen to take it to the next level and understanding everything we're saying, how it improves their trading game. But when you understand what's going to happen and why, and we were talking about this yesterday in the Patreon, the reason that we said tweets were going to move markets, because I want everyone to take a step back, and none of this is financial advice. This is just my own opinion, and anyone that can retain to any capacity, right? Look, if there's no one coming out forward to say who we can or can't negotiate with, they're not naming the new leaders of a country. Well, then, if they're not naming the new leaders of their country, how can they discredit who the United States with and POTUS is talking to or not? They can't. So it's very easy for news to suppress markets. And when you can see what's coming and read this, it's almost like tracking. You can understand what's happening, right? You can see this again. But I want to talk about XRP's price. It jumped as total investments in U.S. spot XRP ETFs reached a new milestone, $1.44 billion. This steady flow of capital comes at a critical moment, with the Securities and Exchange Commission facing a financial deadline and decision this Friday, March 27th, for federal major fund applications. So the industry is now focused on March 27th, the final SEC deadline for spot XRP ETF applications from Grayscale, Wisdom Tree, and Franklin Templeton. Grayscale is currently working to convert its 2.1 billion XRP trust into a spot ETF, a move that would significantly boost the total market liquidity. To stay competitive, Franklin Templeton has proposed a low fee of 0.15%, one of the lowest in digital asset space. So if you look at all of these happening, there's a lot happening again. So if you look at the market, right, and why we say this, it's range bound. And again, ladies and gentlemen, if you've been paying attention to the things that we've been saying, that I can't believe I give this away for free, that we're actually giving things away for free. We told you to sell into rallies. Again, crude oil, we said that. We told you where we thought gold would drop. We said that. We went over all these things just by seeing how current events changes everything. So if you want to learn what we learned, come and join us in the Patreon again, because what I learned before the Mercantile Exchange, okay, was how to interpret the news that would interpret charts and price ex ante. So I'm not looking to interpret charts. I'm looking to interpret the future news before it's released and what may or may not happen that's going to cause the price movements and fluctuations. That's what we're paying attention to, what I'm paying attention to, and everyone that retains any capacity. That's what it is. So if you look at what's happening, let's just look at everything. You saw massive moves. We're going to get to all this, but I want to keep going through this. And again, if you're tired of sitting on the sidelines, and I'm going to reiterate this, and you want to see how this works, one good tip from the pits can easily pay for your entire year subscription. So if you want the deeper macro research again and learn how to take advantage of all this chaos, it's full-blown chaos. And again, you can see some people are taking advantage of this. Come and join over 400 active traders, investors in our Patreon, the Crypto Republic Desk monthly community. Welcome everybody who has been here, new members. Because look, we see people front running some of the trades. We see front running in oil. We see front running in gold. We see it. So it's something, I guess, to me, my entire financial career in life since 15, I understand what's happening and why. So it's really unprecedented, but I want to keep going with this because we got a lot to cover in a short period of time. The biggest oil shock in decades is here, and nobody's really ready for, ladies and gentlemen. Let me be very clear right now from the start. What we're witnessing right now in the global oil market is not a normal disruption. It's not a temporary spike, and it's definitely not something that just goes away in a few weeks. No. This is a structural supply shock, and if you actually understand the numbers behind it, not the headlines, not the narratives, but the real physical flow of oil, you realize very quickly we are dealing with one of the largest supply dislocations in modern history. The shock nobody's pricing correctly. Right now, the global market in oil is missing approximately 16 million barrels per day of crude and refined products. Let this sink in. This is so massive. 16 million barrels per day. To put that in perspective, that's not a marginal disruption. People got cut up like sushi and carried out in body bags and continued because they're chasing trades. They're like lemmings going off a cliff. They just follow group think. This is not a tight market. This is a system-level shock. This is where financial mercenaries rise to the occasion. Here's the point most people are missing. This isn't spread out across the globe. This is geographically concentrated in one of the most critical energy corridors on Earth, which means rerouting is not simple. It's not fast. It's definitely not scalable in the short term. So the illusion of alternative supply, not a lot of people will tell you, don't worry, supply will adjust. But when you actually break down the infrastructure, you realize how constrained the system really is. Yes, something rerouting is happening. One major producer has increased pipe flows from 0.8 to 3.3 million barrels per day. That sounds impressive until you realize that's only an additional 2.5 million barrels per day. Nothing. Another route added 500,000 barrels per day. So in total, you're talking maybe 3 million barrels per day of relief against the 16 million barrel shock. It's not a solution. That's a temporary patch. Why April still looks broken as far as our concern, non-financial advice in our opinion. Now look forward. Even in an optimistic scenario where infrastructure is pushed to its limits, we might reduce the shortfall to around 10 million barrels per day. But here's the reality. 10 million barrel deficit is still massive. And more importantly, there are hard physical limits. I can't believe I'm giving this away for free. I mean, I really can't. It's someone in the Patreon commented that we're giving millions of dollars of free advice, and we are. But at the end of the day, you make a living by what you make, a life by what you give to others. Ladies and gentlemen, pipelines can't just magically double capacity overnight. Export terminals have throughput ceilings. Shipping routes are constrained. So even with maximum optimization, the system remains structurally undersupplied. Why strategic reserves won't save you. This is something I've been harping on the phone. I mean, I've been talking on the phone in the showers. I got to make sure I don't get electrocuted. Let's talk about the so-called buffers, strategic reserves, inventory releases, government intervention. All of that combined might add around 1.2 million barrels per day. Write this down of crude oil. Write it down. Another 0.9 million barrels per day from refined products, plus maybe 1 billion barrels per day from regional inventory drawdown. So in total, roughly 2 to 3 million barrels per day of temporary relief. It's temporary because these are not production increases, ladies and gentlemen. They're inventory drawdowns, which means you're borrowing supply from the future to survive the present. It's so crazy. The real problem is balancing mechanisms. It's demand destruction. So if supply can't fully recover and reserves can't close the gap, then what balances the system? What balances it, ladies and gentlemen? There's only one answer: demand destruction. And this is where things get serious, because demand destruction is not just an economic concept. It's real-world impact. Where the pain hits first, let's break this down. Aviation, one of the most sensitive sectors. Jet fuel can account for over 20% of operating costs. Let that sink in. 20%. So what happens when prices spike? Flights get cut, routes get reduced, margins get crushed, petrochemicals even worse. Naphtha and LPG are core inputs. We're already seeing shutdowns in production capacity. Roughly 5% of global ethanol capacity is at risk. That's not small. That hits manufacturing, plastics, industrial supply chains. My favorite, diesel. Diesel's the backbone of the real economy. Agriculture, construction, freight. When diesel tightens, ladies and gentlemen, oh my God, everything slows down. Not because people want to consume less, but because they have no choice. So this is how price really move. Now here's the part that most retail investors misunderstand. Prices don't rise because of fear. Prices rise because they have to. When you have a structural supply deficit, the only way to rebalance the system is higher prices lead to lower demand. That's it. And when the gap is this large, the price move required is not small. We're talking about levels that the market hasn't seen over a decade. Again, the second order effect, let's go deeper, because oil doesn't just affect energy. It affects everything. Higher energy costs, higher transportation costs. Higher transportation costs lead to higher goods and prices. Higher good prices leads to inflation pressure. And then suddenly, central banks are trapped. They're trapped. Because you now have slowing growth, rising inflation. That's not a normal environment. That's a policy dilemma. So how smart money positions? Again, how smart money positions. What do institutional players do in the environment? They don't panic. They position. The positioning is very clear. Upstream energy becomes extremely valuable. Direct exposure to commodities becomes essential. Volatility becomes an opportunity, not a risk. At the same time, airlines struggle. Chemical companies face margin compressions. Consumer sectors feel the squeeze. Not random. This is the flow of capital reacting to physical reality. So the greatest risk is a false sense of security here. Now, here's the biggest mistake investors make in this moment like this, okay? Let's slow it down. They assume things will normalize quickly, but normalization requires restored supply, stable logistics, coordinated policy. And right now, we got ungats. None of those are guaranteed. We're one tweet away from chaos. Woo! That's right. Chaos. That's why we're the remora swimming underneath the chaos. We set sail and we let the wind of chaos push us in the right direction to make alpha off of these positions. And if you want to understand how we make alpha off of these positions, these scenarios, do come and join us in the Patreon. One Tips from the Pits easily pays for your entire year subscription to the Crypto Desk monthly. The only thing that changes, there's only one major variable that could shift everything, besides a tweet. A rapid de-escalation. If supply routes reopen quickly, if flows normalize, then yes, prices could reverse supply sharply. But based on current conditions, the scenario is not the best or base case. So here's the final message, everyone watching here with this part before we get into XRP, gold, silver, keep on going. So here's what I want you to take away from this. It's not about headlines. It's not about speculation. It's about the math. Write this down. Math. 16 million barrel disruption, write that down. Potential 10 million barrel ongoing deficit, write that down. Limited rerouting capacity, write that down. Finite reserves, the equation has only one outcome. Higher prices until demand breaks. Circle that, write that down. And if you understand that, you stop reacting emotionally and you start positioning intelligently off of what's happening. Because, ladies and gentlemen, not only from this scenario that we just broke down, everything further downstream, from nickel, copper, food, consumables, stocks. The prices of these assets and these markets are going to factor in these. Only difference between capitalizing this or that is knowing how to. And if you want to understand, come and join us. Every day it's growing, and I love chatting with everybody, and people are changing their life and beginning to understand about what moves the markets, not reacting to the market again. So you got to understand this. It's so, I get so enthusiastic because I want people to understand the deeper insights into how this impacts portfolios, macro trends, long-term positioning. You got to understand we're just getting started with this cycle, and you really got to understand that this is just going to go on, and this is updated because this is a lot more of what's really happening. And that's why I go over this again, and why I keep drilling into your head that one good tip from the pits can easily pay for your entire year subscription. If you want to understand the deeper macro research and learn how to take advantage of all this, join over 400 active traders investors in the Patreon, the Crypto Republic Desk Monthly. Join it because it'll help you. Again, I'm moving right along right now because this situation's not learning, and this video may be a bit longer, and if you're still here, I salute you because I'm going in and I'm making up for missing yesterday's video because I can't get off the phones. And if you're understanding that there's no video or content on certain days in YouTube, we're in the Patreon. Our loyalties to our customer base always. I love everybody here. I love my haters. I love when people comment and they're frustrated. We don't take it personally ever. We never do. Again, we're a community that's growing. Our wolf pack grows every day. Being a financial mercenary, there's going to be good days and bad days. Remember that, but we pack up. I always tell you, the wolf is not the mightiest animal in the jungle, but you don't see it doing circus tricks at the circus. Remember that. But right now, I want to focus on two critical developments that are shaping global markets. First, the sharp sell-off from gold and silver yesterday. Second, the deeper structural shift taking place in global energy trade, specifically the expansion of yuan-denominated oil transactions across the Middle East. These two dynamics are directly connected, and understanding that connection is essential. What's really driving the sell-off in gold and silver from yesterday? Let me start with the metals. Gold and silver had come under significant pressure, and on the surface, it looks inconsistent with the macro backdrop. But when we take a step back and we analyze positions rather than narrative, the move makes sense. Over the past several months, markets have become heavily concentrated in a single trade. Long gold, long silver, long commodities broadly, long emerging markets. Implicitly short the U.S. dollar. That's why we told you we like selling the DYX above 100. If you did that, I salute you. If you sold into the rallies, I salute you. The position was built on a widely accepted thesis, de-dollarization, a global stimulus, and an expected easing cycle. It wasn't a bad thesis. In fact, structurally, it's still valid. The problem is that it became crowded and leveraged. So when geopolitical tensions escalate, particularly in the Middle East, the market didn't rotate cleanly into safe havens. Instead, it triggered a dollar liquidity squeeze. That distinction matters. This is not a case of investors turning bearish on gold. It's a case of participants needing dollars immediately. If you're a business owner or investor in the Gulf region, you're exposed to energy markets. You may be leveraged. You're suddenly faced with disruption and uncertainty. You need U.S. dollars for operations, payroll obligations. You don't debate the long-term macro trends in the moment. You raise cash. That means selling what you can, including gold. That's why we've seen aggressive liquidation of paper markets, physical dislocations, including regional discounts, broad pressure across metals. To be clear, we don't view banks as sellers here. The narrative doesn't hold up under scrutiny. Central banks accumulate gold strategically. They do not liquidate in volatility and not constrained by short-term dollar needs. The selling is coming from private sector entities under liquidity stress. So if you look at the entire Gulf region, it's a dollar squeeze, nothing more, nothing less. So that's rough right then and there. So taking the PhD out of PhD for this, if you want to understand this, right? Yesterday we saw a classic macro flush, a reversal regime signal. Gold, it dumped hard. It was negative 250 intraday. It found support at the 200-day moving average, reversed violently and closed green, 400 plus swing. People got annihilated. They got murdered, cut up in sushi, carried out in body bags. Silver, it held stronger than gold, bigger relative rebound, leadership signal. The DYX, the dollar, I love the DYX, one of my favorites. It started strong, then reversed slowly, confirmed stress liquidity shift. Oil had collapsed, $12 swing, triggered by de-escalation headlines. Removed inflation pressure, led to bullish risk assets. If you look at the 10-year Treasury, I love talking about this with everybody, all the mortgage brokers that are inside of the Patreon. I salute you guys. I love when you guys give me the 411, the intel, what's happening with that, Salute you guys. Rates, it started up early, then it finished lower. Market quietly pricing rate cuts again. Equities, S&P, NASDAQ sold off early, ripped higher. NASDAQ plus 400 risk reversal. VIX spiked above 30, faded, panic, unwild. So the real story that most people are not seeing is it's a massive dollar crisis that was purchased at the highs. That's the entire game. So what likely happened, leverage players, long gold, short dollar spike, margin stress, they were forced to selling into gold. Gold dumps, hits the 200-day moving average, strong hands step in. That's where macro guys step in and central banks. Again, they're going to respect levels. So that's the real reversal. Dollar weakens, oil collapses, liquidity returns. Everything snaps back. So you go from not crowded from gold longs, crowded from leverage long shorts in the dollar. This advanced level thinking, you're distinguishing position versus leverage versus fundamental demented. This advanced thinking, you're distinguishing positioning risk, which is leveraged, versus fundamental demand, central banks. That's exactly why the dip got bought so aggressively. And this is why this may not be a bottom, it's capitulation. Sure, yes, we believe that. But if you look at this, it's unbelievable. The selling exhaustion, but nobody knows where things are going. The chop was between the 100 and 200-day moving average. It builds a base. The next move is probably higher in our opinion. Silver versus gold. Silver was outstanding. That matters because most people realize silver outperforming. It's a higher beta risk on industrial demand signal, often leads to the next leg in metals market. So if you look at this oil and gold can't move up together. It's not absolute, but what we're looking at, the rising oil equals inflation, fear, which equals tightened policy. Falling oil equals rate cuts back on the table. So, that's kind of like what we're looking at right now. Ladies and gentlemen, being the financial mercenaries that we are, we take advantage of all of this. Again, that's why your positioning size is so important. It's got to be small enough to be cut, added to, chopped up. You have to be able to stay in the market to go through these violent swings. If you FOMO positions and you run into blind levels, you're going to get sucked out to sea like in a rip current, a riptide. You will be annihilated. Nobody's going to find you, unfortunately, right? And you'll end up giving your hard-earned money to the market maker. Don't do that. Discipline in the markets takes a lifetime to create, right? And again, I keep going over this. Come and join us at the Crypto Desk monthly. There's over 400 traders, active investors who are changing and their viewpoint and learning to understand what we learned from the floor of the New York Mercantile Exchange. One tip from the pit pays for your entire year subscription, and join the community that's taking control and harnessing the winds of chaos that is being given to us to make their portfolios grow, because the old rule book is out the window. Someone keeps asking me every day on the phone, and this is one of our largest clients who I have to always take his calls. And it's so funny because they're calling me right now to see if I'll stop making this video to talk with them. So funny. But I want to keep on going. We're going to the XRP and the crypto space right now. Very important. Remember, money is flowing out of oil. It's flowing out of gold and silver. It is so hard right now to navigate the crypto space because money is circulating. Remember, your weekly, your quarterly, your monthly numbers into the easiest way to trade, the easiest ways to make money. It's not about marrying positions. It's about marrying events and our interpretation of the event. But we had spoken about the Bank of Kazakhstan. We had spoken about Bhutan. I want you to know that their governor, Timur Semyonov, he basically revealed a developing list of instruments in which they will invest, and they add not only cryptocurrencies. He explained that a portfolio will aim to acquire shares of high-tech companies related to cryptocurrencies, digital financial assets, index funds, and other instruments that exhibit similar dynamics to crypto assets. Allocation are expected to begin in April and May. It's massive. We were talking about Kazakhstan and Bhutan last year about their digital gold, everything. Prior to revealing the portfolio, the Central Asian country has made numerous efforts to invest in the crypto space, regulate digital assets. In September, Kazakhstan launched the Aleem Crypto Fund, the country's first state-backed crypto fund. The fund's first allocation was made to BNB with Binance. Kazakhstan acting as a strategic advisor. Bitfinex Securities, a regulated platform for tokenized securities, and its licensed El Salvador and the Astana international financial sector in Kazakhstan. So according to on-chain bulletins, Bitcoin mining map, miners in Kazakhstan accounted for approximately 13% of the BTC hash rate. It's massive, making the country the third largest mining hub globally beyond Kazakhstan. Let that sink in. There are numerous examples of countries often overlooked in international capital markets embracing digital assets. We told you Bhutan, Kyrgyzstan. Again, they launched tokenized gold products last year. Bhutan is a notable pioneer of digital assets adoption. The country began state-backed BTC mining in 2019 and now holds 11,286 BTC. The small landlocked nation is likely the largest BTC holder relative to its economy. It's so huge, ladies and gentlemen, with holdings representing approximately 20% of its GDP. Oh my God. So if you look at, according to the CoinGecko, Kazakhstan's token dubbed the gold dollar, USDKG, has a market cap of USD 50 million. It's massive. In January, Tether, you know, I always go about Tether. CEO told Bloomberg he believes that foreign countries that are buying a lot of gold will eventually launch tokenized gold products. We told you that's why things have been locked in place. That's why on the BRICS and the east side of the trance, they did what they could do to make sure gold would stay in place. Silver would go in place. India monetized silver. You can't export that stuff anymore. It's got to stay in place. There's a bigger meaning behind that. They don't want to be beholden to the U.S. Treasury system anymore. The world is at war, in our opinion, financial war. Beyond emerging markets, BTC and digital asset integration to national economies is taking place. None of this is financial advice, just my opinion. Okay, so if you look at this morning, this is important. The largest, according to Bloomberg, reported Hostplus, one of Australia's largest pension funds, is considering offering BTC and other digital assets and investment coin options through its Choice Plus portfolio. I want to give a warm welcome to all our Aussie members of the Patreon, all the Aussies who are watching. We got some big developments going to be going on. Love Australia. Love everyone from there. There's certainly a demand for some of our members who write in and say, why can't I have access to cryptocurrencies, according to them? So the big takeaway, again, since President Trump took office last year, there's been a steady stream of headlines on the integration of crypto in the U.S. economy. At the same time, however, adoption beyond the U.S. has also gained pace. While nations like El Salvador, Bhutan begin embracing digital assets significantly, soon it's likely that the U.S. authority, as the world's largest economy, further normalize crypto-friendly policy positions around the world. Ladies and gentlemen, that's why we believe things have to get done, and print it to win is going to come. But let me just finish this up, then I want to be done. I want you to understand when I say be done. I want people to be done with the fear. No more fear. You got to get that Gucci clarity, that Gucci conviction. Again, you got to pack up. We're going up this frosty mountain with our frosty beverage. Understand, as the Remora, you're not going to get shot up like sushi. You got that Gucci conviction because you've been listening here, a long-time member. You know what's coming and why. And if you've been writing these things down, I might as well be giving you smoke signals right here. Here you go. Write that down. Write that down. I'm telling you the play-by-plays that we look, the Clip Notes version of it. Okay. Tokenized. No more fiat. No more scary business. What's going on in the market if you're a member of this channel. If you don't like our channel, I'm sorry. Tokenized central bank money is described as essential for the scaling of Europe's tokenized finance markets, according to European Central Bank, ECB Executive Board Member Piero Cipollone. The Euro Systems Points DLT Settlement Initiative is set for launch in Q3 2026. Supporting these markets developments, Cipollone emphasized an ability for clarity, regulation, interoperability standards, and public-private partnerships. EPIA, the ECB's border blueprint for a tokenized ecosystem, is intended for completion by 2028. Next, Delaware lawmakers have introduced bills to create a licensing framework for stablecoin issuer and update banking laws for digital assets. The proposed legislation includes anti-money laundering obligations and draws federal models, but it must undergo Senate review. The State Bank Commissioner would oversee the rule implication approved. EDXM International, backed by Citadel Securities, plans to launch a perpetual futures contract tracking the Korean won versus the USD using a won and USD stablecoin pair. The product aims to offer a digital lower-cost alternative, traditional non-deliver forwards, and is set to launch by early April 2026. BitGo Prime is partnering with Susquehanna Crypto to offer institutional clients OTC access to prediction markets, allowing collateral positioning in stablecoins, USD or crypto. The service targets hedge funds and high net worth individuals for contract USD 100,000 or more. Ladies and gentlemen, none of this is financial advice, just my own opinion. You understand what's happening right now? And you take a step back and you let the chorus of chaos in your mind quiet down. You can see with good Gucci clarity what's happening and why. Tweets are moving the markets. We're following how long before the Marine ships will be in the area of operation, their AO, before things could be done for different kinetic purposes, how that may move markets. Again, if there's nobody to negotiate and the Iranians don't want to say publicly who's in charge of certain situations, there's no way to discredit whether or not there are claims made that there's negotiations going on and back and forth. You can't discredit a rumor. It's the rumor mill at its finest. That's why when we said, I was going back on other videos, I cannot believe that tweets are moving the markets. That's why. You know, Sun Tzu had a great view of looking at things that in general's own camps, he would have chaos going on. Sometimes he'd have chaos going on, so nobody knew what he was thinking or doing. So there's not even his trusted advisors. So there couldn't be any leaks about what he was thinking or going to do or not going to do. Maybe a very small group of people, tiny, knew what he was going to do and why. So that way nothing could be leaked about what you were going to do, not going to do. But in a world where markets can be moved by tweets, this is what you're looking at. Again, ladies and gentlemen, if you're still here and you want to get an edge, do come and join us in the Patreon to understand how we're going to take advantage of all of these things. Well, with XRP, why XRP is the future, we're looking at coins. Again, we look at what they offer the future. They have to have a criteria. They have to have licenses. They have to have a clear utility purpose. They have to have a reason why existing. Everything in the world that you know is changing. The old playbook is gone. You might as well burn it and throw it out. It's those who understand what's happening. But as traders and money managers and whale investors, family offices rotate out of winning trades that they capture alpha, they're taking part of the alpha that they make from these positions and they're buying all the coins that they believe for the future at rock bottom prices. Now, if you want to participate in how this is done in a small version form, do come and join us. We'll show you how we're doing it. And one tips from the pit will pay for your year subscription. With that being said, ladies and gentlemen, the content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You could be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button. Ring the bell. Leave a comment with your thoughts. Turn on notifications and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. Love you all.